Investing in growth stocks is a phenomenal investment strategy for those who have a long-term investment time horizon, because identifying companies with consistent revenue increases year over year, and particularly exponential revenue growth over year periods, can make investors multiples of their money over long periods of time. In this video, I'm going to cover 9 different companies that are experiencing immense revenue growth on a year-over-year basis, or are leaders in exciting new industries that are going to become more and more prevalent in the future, and potentially making investors rich along the way. This is definitely not a comprehensive list by any means, but I believe that these 9 companies will be fantastic investments in 2020, and particularly for the next 5 to 10 years going forward. If you're new to the channel and end up finding value in this video, please consider subscribing so that you can get all of my finance and investing videos in the future. Let's get started. The first growth stock on our list is a company called The Trade Desk, which has the ticker symbol TTD. The Trade Desk is a programmatic advertising platform that allows advertisers to attain a higher return on their ad spend by targeting hyper-specific audiences across various mediums. The success that the Trade Desk platform is giving advertisers is definitely showing, because in their Q4 2019 earnings report, the Trade Desk stated that they had a 95% customer retention rate over that quarter. In 2019, the Trade Desk had $3.1 billion in total spending on their platform, which was up 33% from 2018, the year before. In 2019, the Trade Desk reported total revenue of $661 million, which was a 39% increase from their revenue in 2018. In terms of guidance, the Trade Desk is expecting $4.24 billion in ad spending on their platform in 2020, which would represent a 36% growth from the $3.1 billion that they saw in 2019. They are expecting revenue of at least $863 million, which compared to their $661 million observed in 2019 would represent a year-over-year growth of 31%. Currently, the Trade Desk has a market capitalization of $12.8 billion, and their stock price is currently trading around $280. But with the expected growth in the programmatic advertising space, and with the Trade Desk consistently generating immense revenue growth on a year-over-year basis, I believe that the Trade Desk, with the ticker symbol TTD, would be a great investment for the next 5 to 10 years. The second growth stock on our list should be no surprise, and that company is Tesla, with the ticker symbol TSLA. As you probably know, Tesla is the leading manufacturer of electronic vehicles in the United States, and they also have a substantial presence in the China market, which is extremely important for Tesla's growth. But Tesla is not just an electronic vehicle maker, and in my eyes, I see Tesla as more of a sustainable energy and technology company than just an automaker. And that's because Tesla has their sustainable energy business, which Elon himself has even said that the sustainable energy side of Tesla's business could one day grow to be larger than their electronic vehicle portion of their business. One thing that we have not really seen implemented yet is self-driving vehicles. Currently, Tesla is capturing an enormous amount of data from all of their electronic vehicles, and all of the data that they are capturing is only going to improve the autonomous capabilities of their vehicles in the future. Tesla is crushing it in the electronic vehicle market, as they just reported earnings and stated that they delivered 88,000 vehicles, which was up 40% from the deliveries that they made in Q1 of 2019. Q1 of 2020 was their best Q1 ever, and they even posted a net profit, which seasonally is a bad quarter for them. While Tesla will face setbacks due to the coronavirus outbreak, I definitely think that it is a competitive advantage for Tesla, because with traditional automakers postponing or paring back their expansion into the electronic vehicle market, I believe that that will allow Tesla to gain more market share and get further ahead of its competitors than it already is currently. Tesla is spending a ton of money on building gigantic factories so that they can increase their production capacity, and they are also focusing more on their more affordable models, which are the Model 3 and the Model Y. As they are increasing their production capacity for the Model 3 and the Model Y, they will become more efficient at producing these vehicles, and therefore their costs associated with producing these vehicles will go down, and therefore their profit margins and overall profitability should increase in the future. Elon Musk himself can be a bit of a wild card with how he presents himself to the public and the things that he says, but at the end of the day, he is a visionary, and I am very comfortable putting my money behind one of his companies for the next 5 to 10 years. Tesla currently has a market cap around $130 billion, and the stock price is trading around $700 per share. It's definitely going to be an extremely volatile investment given all of the expectations around Tesla's future performance. But as I've said, over the next 5 to 10 years, I personally feel that investing in Tesla at these levels will pay off in the long run. Next up on our list of growth stocks is Shopify. Shopify is an e-commerce platform that allows people to fire up an online store and begin collecting payments and distributing their products to people around the world. Like WordPress did for the blog creator and making it very easy for someone to create a blog without any technical knowledge, Shopify does the same thing, but for somebody who is trying to create an online store. So Shopify allows anybody in the world to create an online store with very little technical knowledge, and that allows them to focus on the important thing, which is selling their product. In 2019, Shopify posted revenue of around $1.6 billion, which was a 47% increase over their revenue from 2018. In 2019, Shopify had $61 billion in gross merchandise volume on their platform, which again saw an immense growth rate year over year of 49% from 2018. Currently, Shopify is focused on expanding the functionality and offerings on their Shopify platform, as well as expanding globally so that more people around the world can access Shopify's platform. Some interesting Shopify statistics in 2019 are that the number of merchants selling $1 million or more in volume grew 44% in 2019, and also merchants that were with Shopify for 12 months or more grew their merchandise volume 22% in 2019. I think these statistics are important because as sellers on Shopify experience more and more success, I believe that Shopify will retain those customers in the future, which will help Shopify grow their revenue for years to come. In 2020, Shopify is expecting to post $2.1 billion in revenue throughout the year, which would represent a 33% growth rate from their 2019 revenue of $1.6 billion. Of course, the coronavirus shutdowns are going to impact that guidance most likely, but we'll have to wait until their next quarterly earnings report, which is set for May 6th, to see if Shopify revises that guidance for the year. Recently, Shopify's stock experienced an astronomical increase as the CTO tweeted out that Shopify was experiencing Black Friday-like levels of traffic, and because of that, investors started to price in a lot of high expectations for their earnings in 2020. So be sure to keep an eye out for Shopify's earnings in early May, because if there are any negative earnings surprises and investors realize they baked a little bit too much optimism into the stock price, Shopify could go on sale after their earnings report, which could provide us with a great long-term buying opportunity for Shopify stock. Currently, Shopify has a market cap of $75 billion, and the stock price is currently around $640. The next growth stock on our list is Square. Square has the ticker symbol SQ. Square provides small businesses with affordable yet sophisticated point-of-sale software and hardware, and their software provides analytics and reporting to help small businesses make more data-driven decisions. But most importantly, it allows business owners to focus on their businesses and not complicated technology. Like Shopify, Square makes it easy for people who want to sell stuff, get up and running and process payments, and also provides analytics for them so that they can analyze their sales and make more data-informed decisions in the future. In 2019, Square reported a 43% year-over-year increase in their revenue to $4.7 billion. But the Square software and hardware is only one part of Square's business that is thriving. The other part of their business that is doing very well right now is the Cash App. In 2019, the Cash App generated $1.1 billion in revenue for Square, and the Cash App's revenue grew 157% year over year. Despite competition like Venmo, the Cash App has gained a lot of popularity in recent years as it offers additional functionality such as receiving direct deposits and offers the ability to invest in stocks and cryptocurrencies directly from the app. In terms of 2020 guidance, Square is expecting revenue of around $5.9 billion, which would represent a 25% increase over their 2019 revenue of $4.7 billion. Currently, Square has a market cap of $28 billion, and their stock price is right around $62 per share. The next growth stock on our list is Amazon with the ticker symbol AMZN. Amazon, of course, has their massive online marketplace, which is their main product, but recently they have been growing their Amazon Web Services, or AWS, at a very healthy rate. Despite having a market capitalization of $1.1 trillion and a stock price around $2,300 per share, Amazon is still posting very, very healthy revenue growth year over year. Amazon just had their first quarter 2020 earnings report, and they announced revenue of $76 billion for Q1 2020, which was a 26% year-over-year growth from their Q1 earnings in 2019. Their revenue from Amazon Web Services, or AWS, grew 33% year-over-year from Q1 2019 to Q1 2020. Unfortunately, Amazon stated that in the second quarter of 2020, they will be spending approximately $4 billion in costs related to the coronavirus outbreak, as they spend an immense amount of money on personal protective equipment for their workers. They pay higher wages for their workers, and as they decrease the efficiency of their operations in their warehouses through implementing social distancing protocols. It's no secret that the coronavirus is presenting challenges for every single company around the world, and Amazon is no exception to that. But going 5 to 10 years down the line, especially considering the growth in Amazon Web Services, I believe that Amazon will be a good investment. The next growth stock on our list is Teladoc Health, which has the ticker symbol TDOC. Teladoc Health is a key player in the global virtual healthcare or telehealth industry. The coronavirus outbreak has led to a surge in demand for the company's services as more patients opt for virtual appointments as opposed to in-person doctor's appointments. In Q1 of 2020, Teladoc saw a 41% increase in their revenue year over year to $180 million. They saw a 92% increase year over year in their visits. Over the past few years, Teladoc Health has posted immense revenue gains, posting a 65% compound annual growth rate in their revenue since 2016. In 2016, they had annual revenue of $123 million, but in 2019, the company had $553 million in revenue. In their 2020 guidance, Teladoc stated that they expect revenues for the year to be around $800 million, which would be a 44% increase from their 2019 revenues. In the current uncertain environment with the coronavirus outbreak and all the lockdowns, Teladoc Health is positioned to perform very well, but it's important to note that their performance in recent years is not isolated to the coronavirus outbreak, as they have seen immense revenue growth year over year since their IPO in 2015. In the fast-growing and global virtual healthcare industry, Teladoc Health is a key player, and they look like a very sound investment for the next 5 to 10 years. Currently, Teladoc Health has a market cap of around $13 billion, and their stock price is around $175. The next stock on our list of growth stocks for 2020 is Nvidia, and they have the ticker symbol NVDA. In their most recent quarterly earnings report, Nvidia posted revenue of $3.1 billion, which was up 41% from the same quarter the previous year. While gaming accounts for 50% of Nvidia's revenue, it is not the only revenue stream or opportunity that they have going forward. In the future, Nvidia's artificial intelligence or AI chips could provide them with another massive stream of revenue. The AI chip market was worth $6.6 billion in 2018, but estimates have that figure growing to $91 billion by the year 2025. Obviously, that immense growth in that industry is going to provide massive opportunities for AI chip makers, but it is also why that industry is highly competitive. While it remains to be seen who comes out on top in the artificial intelligence or AI chip making industry, Nvidia is certainly a business to watch in that space. As of its most recent earnings report, Nvidia stated that it had $11 billion in cash, and because of that, they have an immense cash pile that they can deploy into these exciting new industries, namely the artificial intelligence chip making industry. With their research and development and all the investments that they can make into this space, they could potentially steal a lot of market share from their competitors. As of this recording, Nvidia's market capitalization is around $175 billion, and their stock price is currently trading around $285 per share. The next company up on our list of growth stocks to watch for the next 5 to 10 years is Invitae, with the ticker symbol NVTA. Invitae's mission is to make genetic testing accessible and affordable for everyone. Armed with genetic information, patients can receive better health care at all stages of their lives. In 2019, Invitae generated $216 million in revenue, which was up 47% from the prior year. To get a perspective of how they've grown over the past few years, in 2016, Invitae posted revenue of $25 million, which just gives you a perspective of how fast this company has grown in the past few years alone. In 2020, Invitae's guidance for revenue is $330 million. This would represent a 52% increase from their revenue in 2019. While Invitae's 50% revenue growth year over year might seem unsustainable, it helps to put their revenue in the context of the total addressable market. In 2017, the global genetic testing market was valued at $7 billion, but that figure is estimated to grow to $17 billion by the year 2025. And with 2019 revenue of around $220 million, Invitae has plenty of room to grow. The ninth and final growth stock on our list for today is Octa, with the ticker symbol OKTA. In their words, Octa connects any person with any application on any device. Octa is an identity management platform that ensures secure connections between workforces and applications. In a world where more and more things are online and on the cloud, and with an increase in the population of people working from home, Okta's position as a leader in its industry should bode very well for its future growth potential. In their most recent year, Octa posted revenue of $586 million, which was an increase of 47% year over year. In the coming year, Octa is anticipating revenue around $775 million, which would suggest revenue growth of 32% from current levels. Octa is a very trusted name in its industry, with customers such as Lyft, Slack, NASDAQ, and Major League Baseball. Octa's market cap is around $19 billion, and their stock price is currently trading for $153 per share. With the online world growing every single day, and with a growing population of people who are working from home, we have never had such a need for security, and because of that, I anticipate that Octa's platform will continue to grow in the years to come. As I mentioned earlier, this is definitely not a comprehensive list of growth stocks that you can invest in, as there are hundreds of companies that you could invest in for the next 5 to 10 years. But these are some of the companies that I'm keeping an eye on, and I do own shares of some of these companies, and the ones that I do not own shares of currently, I will be investing in the very near future. It's important to note that I am definitely not hard selling any of these companies to you, and I think it's incredibly important that you do your own research before investing in any of these companies, but these are 9 growth stocks that I'm personally looking at, and I'm very excited to see how they perform in the years to come. If you enjoyed this video, please consider subscribing and enabling notifications so that you can get all of my finance and investing videos in the future. My name is Chris Butler, and I will see you in the next video.